Ford is warning shareholders that profits in the first quarter will fall sharply and come in well below what Wall Street was expecting. And that sent shares of the automaker lower in trading today. Ford says rising costs are hurting its bottom line at a time when the company is trying to make some big changes to its business. LeBeau has the details.
Ford is trying to steer through a bumpy period where business is strong but feeling pressured, while investments in future technologies like autonomous drive vehicles are pushing up costs. As a result, Ford's first quarter earnings will be at least 20% lower than what Wall Street was expecting. One factor is the growing investment CEO Mark Fields is making in the Silicon Valley, where Ford is doubling the size of its staff. The company has spent more than $1 billion on tech firms that will help Ford vehicles steer their way through traffic as autonomous drive vehicles become more common. But it may be years before we see that technology in the cars and trucks we're driving. In the meantime, it's what Ford sees in showrooms right now that worries Wall Street. Customers are still buying, but increasingly they can drive better deals. In part because there's a glut of used vehicles for sale. So as their prices drop, there's a concern that could eventually weigh on Ford's new vehicle profits. For now, Ford says industry sales this year in the United States should still reach close to a record high. One reason why the company is still maintaining its full-year earnings guidance. LeBeau, Nightly Business Report, Chicago.